cap and we learn what are the 10 largest companies that are out there. Because the 10 largest companies that are out there usually moves the market. Your Apples, your Nvidias, your Microsofts, your Googles, your Metas, because they have these large mega market caps, 4 trillion, 3 trillion in size. These companies carry a lot of weight, not only in the market, but they carry a lot of weight in indexes. And we're learning that all of these companies are pretty much interconnected in the way that we do a lot of things. Apple no longer just sells phones. Apple is involved with web services. Apple is involved with with health. They're trying to diversify themselves over multiple different areas so that they can be legitimate, right? Amazon is not just sending things to and from your home. They also have their web services. They also have a subscription service for music and this, that, and the other. So a lot of these companies learn a little bit from the next company and then they add that to their repertoire. And then they all end up having their main thing that they do. But to stay legitimate, they want to make sure that they look at who the next best business is and try to adopt something that maybe they're doing right that they can implement in their particular company. And you learn these different things being in the market. So the top 10, you should always have an idea like once you see the top 10, they shouldn't be companies that you've never heard of. Some of you guys are just hearing about Nvidia for the first time now. And you missed out on making money off of it from 2016 when we started talking about Nvidia. I've been in Nvidia for almost a decade. And some of you guys have only heard about it maybe in the last 3 or 4 months. And now it's the largest company on the planet. All right. And you could have taken advantage of those gains just by being parts of rooms like this, legitimate rooms. There's a lot of rooms out there that aren't really legitimate, right? This is a legitimate room and I help in legitimizing it, right? So I want to make sure that you guys understand the format. But today we're going to talk about the top 10 companies, right? And we're going to see by using some of my indicators that you guys are going to be surprised. Even you advanced traders, you're going to be surprised at what you see on my charts. All right, you're going to say, oh my God, I've never seen anything like that before. I try to simplify everything. So today we're going to use what we call a week chart, WEEK chart. That means every candle that we see is going to represent 7 days. It's not going to be the day chart that we look at. The way that you can define what chart I'm using a lot of the times is if you see a big old yellow line on my chart, that's usually the 200-week moving average. I always keep it gold. I've kept it gold for the last 10 years. If you see that same line on my chart and it's sky blue, it's probably the 200-day moving average. All right. Now, when I'm talking to my intraday traders and we're trading on like the 5-minute chart, I also keep my moving average gold, but they know that it's a 5-minute chart. So that's usually my 20-day moving average. So I always use a moving average for bias. If you've ever learned the What Would Joe Do method in approaching any trade or investment, I always have to use some type of bias. I have a system that's called the BTG system, which is bias, trigger, and goal. It always starts with the bias. I have to know what I'm dealing with. A bullish company or a bearish company? Or is it bearish for that moment? Or is it bullish for that moment? Because I am what you call a momentum trader. I don't counter trend anything. In my opinion, the worst traders on the planet are counter trending traders. Traders that think they're Superman and they can just get in front of a moving train and stop it. They are the worst egotistical traders on the planet because they believe they know when the market's going to reverse, right? And then they use all of these, now they think they can do it, and then they use all of these indicators to try to reverse it, and it never works out that way, all right? And believe it or not, guys, the people that we're trading against, they're not using counter trending tools to trade the market, so you shouldn't use them either, all right? I am a momentum trader. That means you want to be a bandwagoner. Now, where do you guys go wrong? You guys go wrong because you'll hear something like silver's up 15% today. Joel made 1,000% return on silver today. And then you go and you buy silver. That's not momentum trading. That is buying things. That's what we call FOMO. FOMO is the fear of missing out. You hear somebody else make gains, and instead of doing your own homework, you try to jump on that train too. And I get it. Train's going that way. You want to jump on the train too. But the train is about to turn around. Okay? Or go sideways. I'm going to teach you guys how to be momentum traders, where you see the train going up, but then the train comes to a stop, lets everybody off before it goes higher. Then it comes down, lets everybody off the train, and then it keeps going higher. 80% of the time, I want you guys to think about this, because a lot of you guys have learned the market the wrong way. 80% of the charts that you look at, 80, now, hear what I'm saying. If you were to look at 10 stocks, 8 of them, guys, you're going to see a chart going from the bottom left to the top right of your screen. It's going to be going up at a 45-degree angle, no matter what chart you look at. 20% of the time is going sideways and down. Sideways and down 20% of the time. A lot of you guys' whole strategy is buying double bottoms or buying at resistance and support levels. Because when you first come into the market and you're not knowledgeable and you're not really a trader or investor, common sense is, hey, the first thing I want to teach is support and resistance levels. And then you start teaching everybody that. You start making a whole bunch of money off teaching people support and resistance, not realizing that you're not teaching momentum trading, where 80% of the time is moving up. So I teach moving averages. Why? Because the moving average is going to give you that 45-degree angle up to know that you're trading in that particular direction, or it's going to be a 45-degree angle down 20% of the time. Nothing wrong with shorting. But I'm not going to short because we hit all-time highs. Y'all do that a lot. You're going to learn how to trade the way you're supposed to in angles, at 45-degree angles, not sideways, like most of you guys do. How can you make money on an investment when things are going sideways? That means it's never going to go higher. How are you going to get a 3,000% return when your whole strategy is buying the level that it was 3 or 4 months ago? And then when you miss out on it, you're like, well, it's going to happen sometime. That's why you've been struggling. That's why you've been struggling. Now you're going to change. All you're going to do is tilt your head. Now you're going to just tilt your head. Instead of looking at the market like this, you're going to look at the market like this. And that's going to help you understand momentum. Or if you're a day trader or you want to trade to the downside, you're going to learn to look like this. You're going to look in 45-degree angles, not sideways or up and down. Well, you're not going to look up and down, but most of you guys are looking left or right when you're thinking about a trade or an investment. Stop doing that. Stop listening to people that are telling you to do that. They are not trading or investing the market. Real traders and investors, they're looking for momentum stocks and they're waiting for them to pull back 20 or 30%. Think about this psychologically. In order for me to get from here to here, most of the time it's not going to go in a straight line. It's going to stair step to get there. 45-degree angle, stair step. What you're trying to do is just catch it when it's stair stepping. But it has to be something that's bullish. That's momentum trading. Not something that's going this way. I don't want anything going like this, because more than likely it's probably about to do this. Okay? So let's talk about the top 10. We're going to look at the 200-week moving average, but we're going to look at the top 10 first, because what I want you guys to start doing before you even look at charts, which a lot of you guys don't do, and you guys are brilliant, is nobody's doing math. Nobody is saying, hey, like when I think about the top 10 companies on the planet, y'all know I got a base level in my head that says when they drop 15 to 20%, I'm buying them. As much as a technician that I am, as an investor, I'm going to buy the top 10 companies no matter who's out there saying whatever about the market. If we're in a bullish market, I'm buying any of them. I don't care which one it is. Whoever gets the 15 or 20% first, I'm buying. Because I want to buy it on a pullback. I do not want to buy a company that's been going down for over a year, thinking that it's on sale. If a stock has been going down for a whole year, guys, it's not on sale. It's a broken company. Why do I want to buy a company that has a torn ACL? Yes, because they may have won a championship before. Yeah, but I'm not starting Patrick Mahomes next year on day one. Y'all can do that. I know he got 3 Super Bowl rings. He ain't starting for my team. He's injured. Can he get there back to where he was? Of course he can. But realistically, he's not going to be his same Super Bowl self day one next season. I'm not going to take a chance. I'm going to wait till maybe mid-season and be like, all right, I trust you now. You guys are like all or nothing. I'm just going, I can spot an injured company. If it's gone down for a full year, it's now injured. Most pension funds, mutual funds, when they're investing in remember, you got 1,000 choices. Why do I need to buy the company that people have been pulling money out of for a whole year? And what makes you think you smarter than them? Joel, I just go and look at a 52-week low list. Well, you are one of the worst, terriblest investors on the planet. I can always spot somebody who took a terrible class. Joel, I just took a $10,000 class. They told us to just look for the 52-week low list because you know what? That sounds like common sense. I don't want to have nothing to do with any company that's on a 52-week low list. None. I'm like, I know which companies I'm not buying. Now, can you trade them? Yes, you can trade anything. Am I going to invest in it? No. Because usually when a stock goes down for a year, it's going down for another year. And then another year. It usually takes a whole year just to recover. So, if you're going to go and buy off the 52-week list, 52-week low list, and guys, that's just a list of companies that are at the lowest price that they've been at in the last year. That means their chart's been going like this for a whole year. And now when you go buy it, it's just going to turn around. Because you are the lucky one that's just going to turn, that's going to make all these pension funds and mutual funds say, hey, Brian just bought it, so I guess we need to start buying it too. Yeah, Oracle is injured. I tried to buy. Now here's the thing, guys. When a company first gets injured, you give it a chance. There's nothing wrong with buying Oracle when the CEO got unalived. I get it. He got unalived. I did the same thing. Great insurance company. They'll figure it out in about 2 months. Let's see what happens. Stock ended up going lower. I had to get out. But after 1 year, if UNH can't turn it around in 1 year, you got to say bye-bye, in my opinion, or you have to say to yourself, I'm going to give it another year to get it together. But I'm not expecting it to go back to its all-time highs in 1 year. Once you go 1 full year and you haven't made money in 365 days, it becomes a bearish company and it goes on a 52-week low list. Guys, ain't no pension fund or mutual fund searching for companies on the 52-week low list. You doing it. Not the one percenters. Why am I searching for everybody that's got an ACL tear? Everybody that's got an ACL injury, I want y'all to come into this room. I might buy you for my team. That's what you're doing. And that's what a lot of you guys are doing. You're getting a whole list of injured players that you about to put on your roster. And some of you guys got, your whole roster is everybody who's got an ACL tear, a shoulder pull, a broken leg, a broken collarbone, and you filling your whole team up with these injured stocks. Why are you doing it? Yeah. Well, here's the thing. I know somebody all the way up. I know you see Nike. I'm actually thinking about buying Nike. But here's the thing. Nike's been going down for 5 years. I think it's time. Now I'm making a play like, oh, you know what? Maybe I'll throw a little bit at it. If you've ever looked at Nike's chart, if you're looking at Nike charts now, after 2022, I sold my Nike. I was like, buy Nike. And I ain't seen Nike since. Pfizer, a whole bunch of companies went down for 4 or 5 years. I've been telling y'all, stop buying them, stop buying them, stop buying them, stop buying them. They injured. And you know what y'all keep telling me? They got dividends, they got dividends, they got dividends. I'm like, I don't care. It's got a 7% dividend. It's 30% down. You can do math. What's 30% minus 6%? You so locked into that dividend, you don't even care that it's down 30%. Now, if you're living off of the dividend, I get it. A dividend, guys, is what a company will pay you to own the company. So let's say Nike gives a 3% dividend and I got 10 grand and I put 10 grand into Nike. Nike will pay me $300 a year for my $10,000 investment. And it's not always guaranteed, but it's somewhat guaranteed. So a lot of people live off of it. So if they had $1 million in Nike and they can earn $30,000 a year if the dividend was 3%. So I get it if you're living off of it. I get it. You got to live off something, right? But just buying it because it's got a dividend because you feel safe by being in dividend stocks is just not a smart way of approaching the market. The market is all about making money. So let's talk about the top 10. All right. Let's talk about the top 10. Let's talk about, let's look at the S&P 500. So we're going to use a week chart today, and it's going to look like this. We're going to look at this after we look at the top 10. So the spiders, if you're new to this, the spiders is what most traders and investors look at when they come into the market. This is how we understand and see. Like if I had to talk to every single solitary trader, investor in every single market, everyone uses the S&P 500, the traders at least, because you got your people that look at bonds and treasuries. I get that, right? But as far as your traders and your investors and your day traders and everyone, right? The S&P 500 is going to be that baseline stock or index that we look at to kind of see what's happening. So every day when I turn on my TV, I want to know what's going on in the S&P 500 first. The S&P 500 represents the 500 largest companies on the planet. And if you put them all together, Apple, Amazon, Microsoft, Google, and you stir them all up, it creates this chart. As you can see, looking at this chart, what do you guys notice immediately? What are some of the things you guys notice on this chart without me even telling you anything about this chart? What do you see? What do you see on this chart? Like, in the comment section, what are some of the things that you notice immediately in this chart when you see it? Okay, that's one that's bullish, right? But let's say you didn't understand. Let's say you didn't know anything about the stock market. Like, what's the visual cues? Right? There's lots of green. There's a little red. Right? It's mostly bullish. Bullish, guys, mean things that are going up in price. Well, what is it doing? Like, what is it doing in relation to the yellow line? That gold line. What is it doing every time it hits that gold line? Yeah, doesn't it seem like magic? Doesn't it seem like every time it hits that yellow line, it magically bounces off of it as if it can't even go through it? Someone said earlier, it's a support line. What angle is that line, guys? Is it going straight across, or is it going kind of like in a 45-degree angle? If you notice, it's going at a 45-degree angle. You guys are looking at a 5-year chart. You heard what I just said? For 5 years, throughout a pandemic, through a tariff that we didn't need, through the interest rates being, the Fed's raising interest rates. It's interesting because nobody said that we are at the highest level on the chart. No one said, oh, I noticed that we're at the highest point ever. The stock market, guys, is at the highest price it has ever been in the history of mankind. And here you are scared of it. And we went through a tariff scare. We went through a 500-year pandemic that we don't see for every 500 years. That's all you see in this chart. All of that happened within this chart. You saw interest rates that were that was raised drastically. COVID, interest rate rises, tariffs. And all those different things did. Everybody thought the world was coming to an end all 3 times. COVID, oh man, companies are never going to make money again. All the way to the left side of your chart, that's what you see. So let's just go through what we see here. Hold on. This is where we are today. We are at all-time highs. What if I told you what if I told you every single time it hit that yellow line I bought? And I didn't buy because it hit the yellow line. I bought it because we hit a 50 on the volatility index. I caught all 3 of these bottoms. How many people you know in the last 5 years caught the last 3 bottoms? And not only caught the last 3 bottoms, came amongst all of you guys and said, guys, this is the bottom. Buy. 3 times. That little green line there, guys, y'all know what happened on that day when it hit the yellow line? We hit 50 on the volatility index. That's it. There's people out here charging y'all $30,000 on all of these ridiculous counter trending tools, and all Joel did was put the volatility index in Yahoo Finance and just waited and said, when it hits 50, guys, you're gonna buy. No indicators. You didn't even need to be that great at charts. And you would have caught the low. Watch this. Same thing. Right here. Same thing. right here in 2022. Y'all know when we actually hit 80 on the VIX right here. Now, this is the only reason why it went all the way through the yellow line, because it was a pandemic. We ain't never seen no pandemic ever. Y'all know how long we sat at the yellow line? These represent weeks. 7, 14, 21, 28 days, 35 days. You had 30 days. You had 30 days to catch one of the lowest, one of the best generational lows you ever gonna freaking take. Y'all see that? I caught all of these like magic. This one kind of scared me, because just like everybody else, I was like, well, the world's coming to an end. But you know what my thought process was? Well, if the world's gonna come to an end, money don't mean nothing anyway, so I might as well buy something, because what if it doesn't? We are going to see a 50 again. They come every 18 months. You just got to be ready for when it happens. Okay? In the meantime, you don't have to wait until it hits 50 to buy these particular companies, like your Apples and your Amazon and your Microsofts and the Googles. That's just when you go all in. I'm about to delete this. That's when you go all in. So let's talk about the first company, NVIDIA. All right. Largest company on the planet. Let's talk about it. NVIDIA, if you want to look it up, you can go to your Yahoo Finance, type in NVDA. You're going to see that the lowest price in the last year was $86. The highest price was $212. It's currently at $184. It's down 12% from the highs. But look what would have happened if you bought it at the lows. Y'all are so scared of losing 12%, you can't make 113%. What's bigger? 12% or 113%? If you were able to catch the lows, and the lows was very easy, it was just a volatility index to hit 50, you would have been able to get a double. I think you would have been able to get a double in the largest company on the planet. 100% return year over year. Impressive, right? Will Joel buy this today? No. Joel ain't buying none of these companies unless they're 15 to 20% off. Period. We're going to look at the chart later, because I'm going to show you guys how to breeze through these companies really, really fast. Let's look at the second one. Apple. Second largest company on the planet. A lot of you guys didn't know this. Second largest company on the planet. Apple, if you want to look it up, the ticker symbol is AAPL. Okay. I'll bring this down so you guys can see it. Let me make it a little bit smaller. Apple's low is 52-week low. And guys, you can find all of this information on Yahoo Finance, or if you just ask your ChatGPT or ask your GPT. You can literally, and that's where I got this information from. Y'all know all I did was put, can you give me the top 10 companies and market cap? Can you give me the lows and the highs, the current price? And I need to know from the highs to the low, from the lowest point to the highest point, what the percentage was, and what's the, and how much is it down? How much is the drawdown from its highs? And it popped out this whole list. And then I just screen captured or I just took a picture of it and then made this block and put it here for you guys. I got all this information from ChatGPT, so it might be wrong. It might be right. So Apple is down 10%. Is Joel gonna buy this stock 10% down? Hell to the nah. Why? Because these companies drop 15 to 20% every single year. Am I using a support and resistance area to decide where I'm gonna buy? You can use the 200-day or the 200-week as support, but there's no way I'm gonna say I'm gonna buy this again when it gets to 169. I see a bunch of y'all doing that. Y'all will go to the lowest price and then set an alert there and then sit back and wait and never get in Apple. Because you were taught to buy in a straight line straight across instead of a 45-degree angle. So support and resistance is needed. It's just you just needed to tilt your head sideways. This is where your support and resistance should be, not here. This is sideways movement. I don't want a company that goes sideways unless I'm trading. As an investor, I want this, not this, and definitely not this. Y'all are doing this. The majority of you are doing this. I'm going to buy something that's doing this or buy something that's doing this. And stay away from the companies that's doing this because you think that's FOMO. This is not FOMO. FOMO is buying it at the all-time highs. You get it now? You get why I'm in the top 1%? It's just a slight change in the way that you look at the market. Down 10%, but up from the lows, guys, 53%. See, Apple might average 20% a year, but when you're able to catch the lows like this, and I'm not catching the low because of a Bollinger Band or catching the low because it hit some S3 level or some Keltner channel or some ridiculous thing that y'all are using to try to find support. I'm catching the lows strictly because there's a index out there that tells you when the strongest selling is happening that ain't none of y'all are learning, which is called the volatility index. It's literally the Richter scale of stocks. If the market sells off tomorrow, how do I know how hard the sell-off was? The market's down 2%. Okay. It's just 2% down from its highs. That ain't nothing. There's not going to be any volatility in the market. If the market just hit all-time highs and it drops 2% the next day, people are going to be like, who cares? Now, if the market keeps going down 1%, 2%, 1%, 2%, everybody's going to get fearful until it gets to a point where everybody has sold. That number is 50. When does everybody start getting scared? Right around 30. That's when I'm buying these companies. I know they're going to drop 20 or 30%. It's usually when the volatility index is somewhere above 25. I don't need indicators to tell me that because I have the indicator that's telling me how harsh the selling is. But if you didn't know that all of these companies were interconnected, think of it like this. All of these companies are independent of each other, but they all are like boats in an ocean. If a hurricane comes in the ocean, every boat is going to get affected. You're not going to get immune. You're not going to be immune to the ocean going up and down. Some boats are going to stay afloat better than the others, but they still going to be going up or down. All right, cool. Let's look at number 3. Number 3 is Microsoft. How many of y'all knew that Microsoft was the 3rd largest company on the planet? If you want to look it up, the ticker symbol is MSFT. Check this out. The lowest price of Microsoft was $344. Its high was $555. All of this can be found in 5 seconds. Tomorrow, I'm going to do what we call Mission Impossible. I'm going to give you guys a stock, and you guys got to give me all of this information in like 30 seconds. It's going to be fun because a lot of you guys didn't know that by tomorrow you are going to be the best stock jock in your family. In 24 hours, you're going to learn more about the market and how to break down these stocks than anybody in your family has done, including Uncle Al that's been buying and selling penny stocks for years. And you're going to tell him about me. Now, will I buy Microsoft? It's down 13%. Ooh. Microsoft is getting to a level where I'm like, ooh, 13% is in that area that I like. So will I buy something sometimes even if the volatility index isn't high for an investment? Yeah. Let's say I've never bought Microsoft yet. I'm going to buy it here expecting it to drop another 7%. Now, some of you guys are going to say, well, Joel, if you expect it to drop 20%, wouldn't you just wait for it to drop 20%? Those are you egotistical cats out there that think you can time the market. No, I'm going to buy a quarter position. And if it drops another 7%, I'm going to buy another quarter position. And then if it drops more, I'm going to throw all of my funds in there. I'm never, ever, 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 ever going to put all my money in at one time. That's the same person that's probably trading Bollinger Bands trying to reverse and get in front, be like Superman and get in front of the stock thinking it's going to turn around. The worst traders on the planet, the absolute worst, are counter trenders. The whole market going in one direction, trillions of dollars going in the market, and you going in the opposite direction because it's too high. Same traders is trading sideways. Same traders that go to the 52-week low list to buy their investments. The worst investors on the planet. And it's not your fault. It's just that's common sense kind of tells you to do that, right? I did the same thing. I thought I think I got a pretty high IQ. That's why would I buy 52-week low list? It's just like real estate. If I see real estate at the 52-week low list, I'm buying all of it. It doesn't work that way in the stock market. It works that way when you're looking for a car. It works that way when you're looking for a house or an investment property. It does not work that way in the stock market. All right. I make jokes, guys, because I made them silly mistakes too. It's down 13%. But look at where it came up from. If you were able to catch the lows when that volatility index hit 50 and everybody thought the world was coming to an end, and I was like, okay, Trump can say whatever he wants about tariffs. I don't care what he says. If the volatility index hits 50, I don't care what happens. I'm buying the market. Because I've seen it time after time, president after president, situation after situation, and it always works. I don't want to say 100% of the time, but god dang it, it's close. And that doesn't mean you're going to make money the next day. I'm talking to my investors that are buying quality companies. Something in the S&P 500, not the penny stocks that Uncle Al is trying to get you to buy. Even though cryptocurrency even ran up from there. Crypto is the new penny stock that I actually am encouraging you guys to buy. The top 10 though. Just like we're looking at the top 10, don't fool with anything that's outside of the top 10 of cryptocurrency. All right, let's look at the next one. I'm going to breeze through these. Number 4, Google. 4th largest company on the planet. GOOG or GOOGL. You can buy either or. Now, why they have two separate ones, I have no idea. You probably want to ask Chat or whatever your GPT is. The lowest price of Google this year, you could have caught it at 142. Guess when, guys? Somewhere in April. I think it was April the 4th. Just about all of these companies hit their lows April the 4th. How come all these companies on the same exact day just start making money at the same time, Joel? What happened? Why did they all turn around on the same day? Because they're all interconnected. You're just learning that today. The people that went to see Avatar gets it. All right, low was 142, high was 331, current 326. Is Joe gonna buy this at 326? Heck no. Is Joel gonna short this at 326? Heck, if it's touching a Bollinger Band, am I gonna short it at 326? Heck no. Will I buy it if it drops 15 or 20%? Yeah, so I just gotta put it on. I just gotta wait, guys. I just gotta wait. I gotta wait. But I got it on my list. Gemini just came out. They said it's dang near better than Chat. They even said there was more downloads, and Google just got in a relationship with Apple again. So Google is bullish. Any of you guys trying to short it today, y'all can never trade or invest with me. Ever. Because it is bullish. I am not shorting nothing at 52-week highs. Because they tend to keep hitting highs. Now, as a day trade, I will do anything. Remember that, guys. I want y'all to remember this. I will short the heck out of Google tomorrow, but I'm in and out the same day. I will even short Google for a 1 or 2 day trade. But I'm not shorting Google on a put for 14 days because it hit an all-time high. You guys are the worst traders on the planet. It hit an all-time high, so let's go buy puts. What kind of sense does that make? Because you never learned the correct way of doing it. You was better off buying calls into it on dips. You don't believe me? Do the numbers, guys. Don't believe what I'm saying. Take 10 calls to the upside when it hits all-time highs, and then take 10 puts. And then you come back and tell me what came from that particular situation. Google probably hit if it hits an all-time high, it's probably going to hit it 10 or 15 times before it turns around. Just like when companies hit 52-week lows, they keep going lower and lower and lower. So be careful. Okay. Amazon, number 5. We're halfway through. 5th largest company on the planet. AMZN, if you want to buy it. The lowest price was $161. The highest price was $258. We're currently at $246. It's no way on this planet that I'm going to buy Amazon right here, when I know it's going to drop 15 or 20% within the next year. Will I buy it if it's down 13 or 14 and it just can't break a support level? Yeah. But Amazon, there has not been a year that it's only been down 4%. Now, it is coming up from where it was. So I understand the argument that what if it goes to 300? Well, if it goes to 300, what's 20% off 300? Let's do the math. 300 times 20% is 60. 60 minus 300 is, guess what, guys? 240. Lower than where we at right now. Did you hear what I just said? If I did the math right, If we hit 300, 20% off, 3 times 2 is 6. $60 minus 300 puts you at 240. So why do I have to be in it now to go hit 300 to just come back to where we at right now? I could be making money during that time. Never heard anybody say that before, right? Because you never heard somebody who actually trades the market. Future Forward Investing said, blowing up your account is the best way to learn. That's why if you're going to blow up an account, use the least amount of money possible. I use the 90-10 rule. The 90-10 rule says that you can't put more than 10% of your assets in any given company. If you get a $10,000 tax return, if you get a $10,000 tax return, $9,000 needs to be in something either like a S&P 500, or that $9,000 needs to be in like 10 different companies. And then you use $1,000 to trade. So anybody that wants to do the millionaire challenge with $1,000, you better have access to $10,000. Because a lot of you guys are getting over leveraged. You heard what I just said? If you're going to start off with $1,000 like myself in the millionaire challenge, you better have 10,000. You better have 9,000. You better be able to re-up 7 days later. If you can't re-up in 7 days, you're over leveraged. Whatever amount of funds that you can re-up in 7 days, that's what you start with. And you'll get there. I promise you, you'll get there. If you practice, get a couple of 100% returns under your belt, you'll get there. I know a lot of you guys guys, 100% return in the options market, you gon' get there. You got all year you could take one trade a month and still get to $1 million. Just be patient. You got to learn the skill. It's going to be harder to do that just regular investing, but that's fine. Don't always put all your eggs in one basket. Like if you got $10,000, no more than $2,000 needs to go in any given company. You can take it up to about 20%. I use the 90-10 rule, but you can take it up to 20%. That means if I got $10,000, you only allowed to put $2,000 in crypto, people, not the whole $10,000 in the Doji coin like y'all want to do. And just get it over with. Just put it all on red, and I'll just see what happens in 20 years. Spread it out. 2,000 in crypto, maybe 2,000 in Apple, maybe 2,000 in, I don't know, a restaurant stock, maybe 2,000 in a bank stock, another 2,000 in something else. Okay? Spread it out. And when you put the 2,000 in, you don't put all 2,000 on Bitcoin tomorrow. If I'm gonna put 2,000 into Bitcoin because it's down 20-something%, I'm gonna put maybe 1,000 at the most first. See what happens. As good of a trader as I am, guys, I never get the lowest price. I did on those. When I get the lowest price, it's usually when that volatility index hits 50. Or 30. When it doesn't hit 30 or 50, guys, I rarely get the lowest price. So if I know that in advance, I that's part of my strategy. Joel, you're not going to get the lowest price. And you're one of the best that's out there. So throw 2,500 in, or let's say I'm doing 2,000, throw 1,000 in and wait. That's even with options, guys. Dollar cost average into your options also. That's day trading too, guys. Even if you trade 2 or 3 or 4 contracts of futures, quit buying all 4 contracts at once. 90-some% of the time, you probably could have got a better price. But we all want to just throw all our money in right now. I want it all right now, Joel. And I want to do it all at 9:30. And then I just want to sell everything at 4 o'clock. And that's your strategy. I'm making fun of you guys because this is what I used to do. I was terrible. You guys are where I was. I'm trying to get you guys here. I don't want to change your strategy. I just want you guys to see the market differently. Change a couple of things. I'm not trying to make some of you day traders investors, or investors traders, or Forex traders futures, or futures to Forex. Nah, a lot of you guys are already there. You're just missing that small little piece. One, stop counter trending. The worst traders on the planet are counter trenders. The absolute worst. Counter trenders can't catch a 4,000 or 3,000% return in Nvidia. You're not going to be able to catch a 1,000% return in the options market. Well, you can if you're in and out the same day. It's just hard. It's harder. Go with the momentum. Taiwan Semi, number 6. Uh-oh. Taiwan Semi, number 6. 134 was the low. 333 was the high. We're currently at 322. We're only down 3%. But if you caught it in April, you would be up 140%. If you learned what the volatility index was, which is actually the best indicator ever created on the history of this planet, that's the only time you counter trend, in my opinion. You only counter trend investment wise when that volatility index starts to creep above 30. Then you can be a counter trender, but not until then. Counter trending in a bullish market is suicide. Dang, I might get messed up for saying that. They might send me a warning. It just is. All right, I made those mistakes. All right. Number 7, Meta. Guys, I like this one right here, right now. I like this one right here, right now. Tomorrow. You had to ask me which of these I would buy. I'm probably gonna buy some tomorrow. Now, does that mean it's gonna turn around right now? No. I'm talking strictly to my investors. I know some traders that's just like, why, John? I'm looking at the hour chart right now. I'm not talking to traders. I'm talking to pure investors. Who's gonna hold this longer than a year? Anyone holding this longer than a year. That's who I'm talking. I'm not talking to you getting in and out tomorrow or 14-day trades. I get that. Remember, there's 3 types of people in here. We got to know who we're talking to. The majority of what we're talking about today are investors, 12 months or longer. Take off your trading hats for today. We gonna get to the trading. Take your trading hats off, put on your investor hat. You're going to see the market differently. 18% down. I love companies like this when they're 18% down. Meta is huge. For it to even drop 30% or 50% is like when Nvidia dropped 50% for a company that big. I think it was the biggest drop like in history for a company because it was so big and it dropped 50%. Then it was the highest gain ever in history. Nvidia dropped 50%, guys, in a year, and then went up like 200%, like something stupid. You got to look at the numbers. Absolutely ridiculous. We looked at it earlier, but it's down 18%. The highs was 796, the low was 480. We right smack dab right in the middle, 646. I love that type of risk to reward. All right, 1, 2, 3, 4. What was Taiwan Semi was before that. 3 more, and I'm gonna show you guys how it looks on the week chart. Broadcom, AVGO. A lot of you guys never heard of this company. It's the 8th largest company on the planet. Semiconductor company. They say it's the next Nvidia. What's the next Nvidia? This one, or AMD, or Micron, or Supermicro. I don't know. It's one of them. But right now, this is the second largest semiconductor company on the planet. So common sense always says, well, if it's going to be the next NVIDIA, it's going to be the one that's the second largest. Well, this is number 2 right now. For years, it was AMD. AMD might catch up, but for now, Broadcom holds that position. Lowest was 134, highest is 414, currently at 332. Ooh, down 19%. That sweet spot that I like. Does it necessarily mean it's about to turn around? No. But at least I got 20% equity in it. At least I'm not buying it off of FOMO. If you caught it April the 4th, you would be up 140%. All right. Next one. Tesla. I hate Elon. Well, Elon's about to be a trillionaire. So you really gonna hate him. Tesla dropped to 214 during all of that mayhem. Fighting with the president. Throwing $300 million at him and didn't get anything out of it. Stock plummeted. People stopped buying Teslas. I start feeling bad for owning 2. There's bumper stickers. I literally saw a bumper sticker, was it 2 or 3 days ago? And the bumper sticker said, I bought this car before Elon went crazy. Like, we gotta apologize for the CEO. Well, guess what, guys? It's on its way back to its highs, whether you like them or not. The lows was 214. Should have bought it in April. Now it's sitting at 498. It ran 100% from the lows. Do you know what type of money you could have made in the options market if you got 100% return? And you caught that low and you grabbed some options 1 year out? That's when you make obscene amounts of money. That's when you take 10,000 to like 100 grand. 10,000 turns into 150. And then you can use 50 and do whatever you want with it. And just wait for the volatility index to hit 50 again. Millionaire challenge. It's a slower way. It's a slower way to wait until the VIX hits 30 or 50 and then wait 1 year out. But I mean, guys, it's 1 year. 1 year is going to go by really, really fast. And it wasn't even a year from April. It's only been like 9 months. It's down 12% now. I don't like buying Tesla at 12% because Tesla, anytime I see a company double in price like this from the lows, it's probably going to drop 50% at some time. So why do I have to buy it here? I'll wait until it hits 600 because it's probably going to pull back to 300 and then I'll buy it at 300. But I got to buy it secretly because if I tell y'all I bought it, y'all will try to call me try to say I'm supporting him. Oh no, I'm trying to support my family. And if I see one of the top 10 companies go down 40 or 50%, I don't care how you feel about the CEO. I care about the trip to Africa I can pay for. You guys get too emotional when it comes to these companies. Okay? Now, that doesn't mean, like guys, I do have morals when it comes to stocks as well. So I understand if you do it, but don't judge me for it. If you came and told me that you owned a cigarette company, you know, because I don't believe in cigars or this, that, and the other, I get it. Like, I will not buy, for a long time, I wouldn't buy oil companies and I wouldn't buy cigarette companies. So I get it. You know what I'm saying? But if you were like, Joel, I'm not being you're being too emotional about it, then I won't judge you. If you're like, look, I don't believe in it also, but I bought it because it hit a certain level and I want to make some money off of this and then use that to go take my family here or there, I understand it. Then I can take away the moral aspect of it because it's just purely business. Some people can do that, some people can't. I don't want to go out there and learn about every CEO, because if I did that, I wouldn't buy a single stock that's out there. So I don't try to get into the personality of the CEO. All right, number 10, Berkshire Hathaway. Berkshire Hathaway, guys, is Warren Buffett's company, BRKB. If you really want to have some fun, go look up BRKA. Somebody tell me, what is that stock price today? Like $800,000? Like 800 grand or something for a share. And it's the same company, which is hilarious, which is why I always tell you guys, stock price is an illusion. Stop getting caught up in a stock price. You can create your own stock price. But Berkshire Hathaway lows was 441, highs was 542. 542. It's down 8%. I'm going to wait to buy this one. 15, 20% is my sweet spot. It's only up 12% from the lows. Solid company. A lot of people buy. Berkshire Hathaway is like the S&P 500 of stocks. If you want to buy a stable company and not really be afraid of it, this is the S&P of the stock world. Very diversified. Now, when they bought Apple and they had a big share of Apple, they were a little bit lopsided, which is probably why the company hit $1 trillion in market cap. But since then, they sold it. And now the CEO just stepped down. So, he's like 90 something years old. So the CEO finally stepped down. And but it's still a solid company. 700. Y'all see this? This is a real number. This is how much Berkshire A costs. If you want to own one share of Berkshire A, it's $747,000 a share. People think because it's $747,000 a share that it's the largest company on the planet, and it's not. All right, so what I'm going to do is I'm going to show you guys I'm going to show you guys the same charts. But we're going to look at the why didn't it pop up? We're going to look at the 200-week moving average. Hold on. Give me a second. Why is it giving me the business? All right, we're going to breeze through these so that I can get to you guys' stocks for the last 30 minutes. All right, let's try this. Yes, we're going to look at the 200-week moving average. We're not going to look at the 200-day, guys. We're going to look at the 200-week moving average. I don't know why it's giving me problems. Hold on. Not today. Not today, Shaitan. Come on. Gotta be able to pull up charts today. Hold on. There we go. I knew there was something wrong. All right, we got it to work. All right, so you're looking at, remember we were looking at the SPY earlier, so let's pull up Apple again. We're gonna go by faster this time. So we know how much did drop. That was the fundamental using, for you guys that don't want to use charts, that's a way that you can do it, but you can also do it this way. Watch this. Look how fast we pulled this up. So you guys are looking at Thinkorswim charts, and we're looking at Apple. So let me remove all of this. So you guys are looking at Apple, and look at Apple, guys. You're going to see the same pattern on all of these charts, and you're going to be angry because you're going to say, why am I using all of these ridiculous things when all I had to do is pull up this little yellow line as an investor? And as you can see, you guys are looking at Apple. You're looking at 5 years worth of Apple, but look at what happens every time Apple gets to this yellow or close to this yellow line. People are buying it. People are buying it. Look at that. It was perfect right there. Y'all know what date this was? This was April the 7th. On April the 7th, we had a volatility index that hit 50, and it just so happened to hit the 200-week moving average at the same dang time. What, Joel? Yes, on the same day or the same week that the volatility index hit 50, that only happens every 18 months, we also touched the 200-week moving average. It was almost a no-brainer to buy Apple. I don't know. How much was it down? Let me check. You could take out this little cursor here. If I was to go to that high at that time, Apple dropped 35%. So think about it. I would have started buying it at 20%. And then it would have dropped another 15%. So I would have been into it about 17 or 18% down. Now watch this. Even though it was down, my average would have been about 17 or 18%. Watch this. Even though my average would have been way up here at 17 or 18%. From that point to where we are right now, I would have been up about 35%. 21 as of today. But at one point I was up 35. Dollar cost average in at 17% rose 35%. Double, what I was doing or invested in. But if you were looking at charts, and you see it get close to that yellow line, let's say it gets close to this yellow line and then starts to go up in price, like right here. Then once it broke that trend and it went up for 7 days, you would have been able to say, well, it's probably not going to touch the yellow line. So I needs to be getting in right around her. Traders or investors, and you would have been straight. So it doesn't necessarily have to touch the yellow line. If you're a momentum trader, you wait for the momentum to happen because, see, momentum traders, when you come into the market, your brain tells you that the market is only going to be up one day or down another day. So your brain tells you, I have to get in right now or I'm going to miss it. Momentum traders don't think like that. Momentum traders say when the market goes up in value, it keeps going up sometime for years. Counter trenders don't think that way. They do, but they don't. These are weeks, guys. Even when it broke this trend, it went down for about 4 weeks before it went up for like 15 weeks. So there are periods where it actually feels like it's going to zero, but it won't. That's why you got to look at the volatility index. So that's Apple. Let's look at the next one real quick. That's Apple. Let's look at, we were supposed to look at NVIDIA. Let's look at the largest company on the planet. The largest company on the planet didn't even give you a chance for it to go to the to the yellow line. Y'all see that? The last time NVIDIA saw its yellow line was in 2023. And look at that, guys. You're talking about a generational low. People couldn't wait for this to happen. It hadn't happened in like 3 or 4 years But when it happens, you just got to buy just because it's there. But it's not going to be something that pays out 1 week or 1 hour later. Sometimes it might not even pay out for 2 months. Actually, guys, this is not the 200. This is a 200 simple moving average, but it's a week chart. You're not looking at days. Every candle is representing weeks. 1 week. Thank you for helping each other in the comment section. Y'all see that? Off the screen. Joel, you mean to tell me all I had? Yeah, if you don't believe me, go back the last time it hit the yellow line. It hardly ever does it. Look at this, almost to the penny. Y'all know what this is? That's COVID. Wait, Joel, you mean to tell me that during COVID, we came and touched this yellow line and everybody knew to buy it there? Yep, except you. Except you. You talking about making a fortune? Look at this, off the page. And we ain't seen that yellow line again. We saw it at COVID, and then we saw it right here. You had to wait from March 2020 till September 2022. And then we ain't seen that bad boy since. It's been 4 years. That's why everybody is like, yo, sell your Nvidia. Because we going to see this yellow line at some point within the next 18 months. But shoot, it might hit 500 first and then touch it at 250. I'm not selling mine. I already sold dang near 70% of my position. And I'm just letting the rest ride just because I like flossing that 3,000% return. Because I know can't no other traders say they did it. There's like 10 other traders I know with 3,000% returns in Nvidia. It puts you in another league. It gives you respect. It gives you validity. Look at this. This is Microsoft. You're seeing it with your own eyes, people. It's not just me doing this. This is the whole world doing this. Except you. If you want to counter trend, this is how you do it. You want to buy at a support level. This is at a 45-degree angle. It's not flat. 45 degrees. See that? See this? The last time we touched it, guys, was guess what? April the 7th. Hold up, Joel. Apple hit it April the 7th also. Microsoft hit it the same day. Yep. They all hit this. Now, Nvidia didn't do it because of how strong it was. But everything else hit it. Now, Microsoft chart doesn't look too good. We got what we call a double top. And it's falling. So we don't know. But I'm going to take a shot at it right here. If we go lower, my thing is this. If we go from 466 to 372, guys, that means can I stomach another 18% drop? I think I can stomach an 18% drop in Microsoft. I buy it 18% off. If it goes down another 18%, great. Because when it touches this, guys, it goes up for years. The last time we hit the yellow line was 2023. Then we hit the line here in 2025. So if Microsoft gets to this yellow line and it goes down 18%, it might go stupid for the next 2 years. Okay. All right, let's look at, what are we looking at next? Google? All right, let's look at Google. I know you guys are thinking we're looking at the same chart every time. We're not. These are different stocks doing the same thing. Now look at Google. Google was just paying out everybody every time it hit the yellow line. Look at this. Guys, this is all the way back. I know you're not going to believe this. You're not going to believe what I tell you. What you're looking at right now is 2008 and 9 real estate market crisis. Now, it did take a year for it to get back. Remember, it was the worst real estate market crisis in history, but this is why you don't counter trend. What if I told you all you had to do during the real estate market crisis is learn how to draw a line like this? What if I told you that? What if all you had to do was learn how, and you didn't even have to do it there. You could have drawn the line right here, and I would have said, once it starts to turn green, you would have bought. You would have been like, what? Yeah. What if I told you all you had to do is wait until it turns green, and you would have caught Microsoft at $9 and now it's sitting at $3.32. And then if you missed that move, you could have bought it here when it touched the 200-week moving average. This was 2010. Then you could have waited again right here when it touched the yellow line, which was probably 2011. Then you could have waited until Google hit the yellow line. Now that was 2011. It didn't touch its yellow line again perfectly until 2020. Yes, guys, this is COVID when it hit this yellow line. Get out of here, Joel. You can't tell me that it's this easy. Yep. Do you see anything else on my chart? Do you see Elliott waves or MACD histogram or stochastics or relative strength index or pivot points or Bollinger Bands? You don't see nothing on my charts. And every single one of these stocks that's at the top is exhibiting the same patterns. Same patterns. Look at this. I mean, it's like, and look at where we at now. Y'all want to buy Google way up here. Y'all want to buy Google way up here when you know it's going to fall back to this yellow line. The average. It's not if it's going to do it, it's when. It's going to touch it. Oh, you guys can't see that. It's off the charts. There it is. Y'all see that? I gotta make this smaller. Hold on. Dang, y'all missing some of it because I got some of it off the screen. There we go. All right, we got a couple more to look at. I just want to continue. I just want to just keep making you angry at how easy this crap is. Look at how beautiful it hit that yellow line. Beautiful. Y'all know what the date was there? You got it. April the 7th. Joe, how did you catch the bottom? Everybody caught the bottom that day. You just didn't. It's 1,000 stocks out there. I done showed y'all. We just looking at the top 10. And what? Four out of the last 5 touched the yellow line on April the 7th. Let's look at Amazon. Joel, if you show me one more stock that touched that yellow line April the 7th and I was shorting the market on that day. Word? All right. Amazon didn't touch it, but it sure got close. It sure got close. Look at that. Look how close it got. Uh-oh. Ugh, these charts are killing me today. Look at that. I mean, that is such a beautiful thing. Look at this. How did you know to buy it there, Joel? You're just a genius. I'll take that. I'm not, guys. I literally just looked at I literally set an alert and was like, when it hits 50, can you give me a call so I can buy something? That's all? Yeah, that's it. Send my $10,000 in the mail. Send me, if y'all gonna pay $10,000 to these ridiculous people out here who think they can trade or invest, send it to me. Y'all see that? Now here was a big move. Now Amazon really hurt people here. I'm not even gonna lie. I remember when it happened. I forgot what it was going through. I think because the interest, what was this? This was 2022. Oh yeah. It really hurt people because the interest rates being raised really was going to affect the company. So it did go sideways from April the 15th all the way to about, wait, that was April, July, August. Oh yeah, that mug was in the penalty box so you would have lost on this one. Anybody that tried to do a 12-year leap or 12 month, 13 month, 14 month, you actually would not have made any money. And you would have been mad at old Jolie Joel. This was the only stock that didn't really do its thing, like within a year. It really hurt a lot of people. But if you were able to, if you had a little bit of patience and you were able to maybe, even then, even if when it broke this trend, I know a lot of people, including myself, that was in this stock right around here. And then that bad boy went down and didn't come back from August 2022 to August the next year. It took a whole year to get it back here. So many people were angry with Amazon. But if you were investing in it year after year, these are just for options that's supposed to pay out 1 year later after the volatility index hits 50. That's why it's so important, guys, that when you're investing or trading, you don't put all your eggs in one basket. 4 of the trades would have worked out. 1 of them wouldn't have worked out. But if I'm making more than 100% return on all of the others 4, who cares about this loss? Stop spending so much time looking at losses. You're probably going to win somewhere in the 80% or higher range if you're momentum trading the way that I'm teaching. So you're going to get a loss here or there. But if I take a little bit when I'm losing and I take a lot when I'm winning, you're not going to care about loss. Just like I don't care about losses. I care about them, but they're not the end all be all. I'll just get mad and rant like AMD, guys. I lost on AMD big time. But y'all saw my portfolio. I still, my portfolio still was going up in a 45-degree angle. I'm just mad that I lost. That's it. I was still profitable overall, but if I had all of my funds in AMD, I would have been very, very upset. All right, let's look at Taiwan Semiconductor. I know I said I was going to finish all of these to get your stocks. I don't know if we're going to get to them. Taiwan Semi, same thing. Joe, you just keep showing me the same thing over and over again. I know. I'm trying to teach you guys to clean up your charts and use something as bias. The 200-week moving average is the perfect bias to use for investing. It's just that you gotta wait for a long time. The 200-day is gonna be a lot shorter, but I don't want you guys to use the 200-day as your end-all be-all. It's great because it's right there in between. The 200-day moving average is gonna forever be the most used indicator on the planet, but it's also going to be short term. Okay, I use the day charts for 14-day trades. I don't use the day chart. I use the day chart to kind of see what the bias is, but as an investor, you want to use this chart, the week chart, to kind of give you an idea. That's going to give you the courage to buy this when it comes down, but you can't expect it to turn around in 1 week, 2 weeks, 3 weeks, sometimes even 3 months. That's why it's very important. Remember, we're talking to pure investors today. These are the people that are going to be holding this for a year, 2 years, 3 years, 4 years. We only saw really one loss, and it really wasn't even a loss. In 1 year, you would have been right at the same price that you bought it the year prior to, if you were buying it at the 200-week moving average. That was Amazon. I saw one loss over 10 years, something crazy. I'll take that all day, every day. See this? This is Taiwan. I mean, we ain't nowhere near that right now. Now, this doesn't mean, oh, it's time to short. Guys, you don't short until you break this line right here. This line right here, this support level has not been breached. Now, you traders in the room, can you short down to this white line? Of course you can. But we're not talking to traders today. We're not talking to traders today. We're talking to investors. It's sitting in a channel. So anybody that says, yeah, Joel, we hit the top of a channel. We hit the top of this channel. I think we're going to reverse for 714. You know, that's 21 days. I can see you taking a short for that reason. But I'm not taking a short just because we at all-time highs. I'll take a short if we hit the top of this channel and we at all-time highs and we break to the downside with momentum. I'm not going to put a Bollinger Band on here and just take it because we touch it. Which a lot of you silly non-making money traders be doing. Y'all can see how I feel about a lot of the indicators that are out there. Oh, you use the 800 day? That's crazy. I've never heard of the 800 day. You schooling me today. All right, that's Taiwan. Let's look at Meta. We might not have time to see your stocks today, but we will have time tomorrow. This is Meta. Meta's doing the same thing, guys. If we were to go all the way back to 2018, look at this. This is 2019. I mean, for 6 years. Buy. Whoo, this was a terrible. I remember when this happened too. This is when they decided that they were going to, put all their money into the metaverse. But you didn't have to do this. See, what I like to do, guys, is sometimes I will take a chance at the 200 week. I'm not going to lie. If it touches it, I'm buying it. It dropped and then it came back and then all of a sudden it started to drop. And I had to get out. But if you had some patience and you said, you know what, if we were in a downtrend and we start to go up and I see green candles, as soon as we peak above this white line, I might want to buy. Right there. And look at there. But somebody would have said, why would I buy it way up here at 136, Joel, when it came from 90? I'm just going to wait until I'm just going to put a support level here. And when we get down to this support level and we do a double bottom, then I'll go ahead and buy. Do you see a double bottom anywhere on this chart? Do you see? Show me a double bottom. Somebody show me a double bottom in Meta. Okay, there we go. You gonna wait 4 years? Well, I guess you waiting a year or two for it to hit the 200 week. I guess you can wait for a double bottom. But why am I waiting on this when all I gotta do is just literally draw this little white line? I don't even care. It could have hit the double bottom or gone lower. You still gotta go through this white line. Whether it was a double bottom, triple bottom, quadruple bottom, no bottom, I don't care. Once you break through this trend and go green, I would have been in somewhere around here, way up here. Why? Because I am a momentum trader. Once the momentum starts, guys, it's going to keep going. Which it did. It went right back to its highs. And now we're going down. Why am I buying it right here? Because I don't have a full position in Meta anymore. I need to get back in it. So I'm willing to get in now, even if it drops another, if we drop from 641 to this double bottom down here, it'll drop another 25%. Are you willing to hold this if it drops 25%? Yeah, because if I catch it and it jumps from the lows back to the highs, guys, I'm going to be up 70%. I will risk 25% to make 70% any day. Unless you believe the world is coming to an end, which a lot of you guys do. A lot of you guys will not invest in the market because you really think the world's coming to an end. When if you really believe that, then you're right. There's no reason to buy. But I tell people this: if the world's coming to an end and money doesn't mean anything, you might as well buy something anyway. That was my mindset back during COVID. I was like, well, if we all gonna die, I might as well buy some, because what if we don't? Money don't mean nothing anyway. Might as well buy. You guys are hoarding. I'm going to hoard all of my money because of COVID. Why? You ain't going to. Maybe gold or maybe ramen. Ramen's going to be more valuable than the money that you have. Ramen noodles. What else we gonna store? Gold, ramen noodles. I can't think of nothing else. Guns. That's about it. It's going to be a new currency. All right. So that was Meta. All right. Let's look at Broadcom, AVGO. All right. Broadcom. Now, Broadcom is nowhere near its 200 week moving average, but it's at least telling you that it's hella bullish. So the last time it touched this 200 week moving average was 2023, and that's just because the interest rates were lowered. So could it drop all the way down here to 147? Yeah, it could. It actually looks like it wants to. So be careful on this one. I know I gave you guys this one earlier, but it's doing big things. And if we just broke trend, we just started breaking to the downside. So be careful with this Broadcom. All right, let's look at the next one. Tesla and then Berkshire. We got Tesla. Look at this chart, guys. Everybody knew where to buy. Look at here, look at here. Boy, look at here. Look. That was March 2020. This was, what day was this? This was 2023. This was right after, this was the end of the bear market. This was the tariffs. No, I'm wrong. That's not the tariffs. That's 2024. I don't know what happened in 2024. This is the tariffs. We just came down to the yellow line. That's it. And now look at where we are. We hit all-time highs about 3 weeks ago. Is it on its way back down? I don't know. Looks like a bear flag to me. Until we break this trend line here, I would not be interested in it. See, if we break this trend, and that's a clear break, we spend 7 days underneath this white line, then I can see you saying, hey, I'm shorting Tesla down to the yellow line. But I don't see that. It has not broken the trend yet. It's going straight. It just hit all-time highs. Yes, it took a break for 21 days. We don't know what's about to happen. Once it breaks this trend and it sits underneath this white line for 14 days, 2 to 3 weeks, then I would be on the Tesla short bandwagon with everybody else. All right. Last one, Berkshire A. Actually, I want y'all to see this price. This is crazy. This is Berkshire A. Now, it's going to be the same chart. But in this while, this stock hit 800. This is a real number. This stock hit $812,000 a share. That is wild. $812,000 a share. That's what that white line says. Let's see if we can make that bigger. Nope. I tried to make it bigger. It just won't. But 812,000. But let's look at it. And look, it's never touched the yellow line. Well, yes, it did. It did it back during COVID. During COVID, what, 9 out of 10 stocks hit this yellow line? 9 out of 10. We knew where to get in. And it's not going sideways. Here's your double bottom right here. That's it. Ain't no more double bottoms. It's just stair-stepping for what, 6 years? Crazy, right? So using this yellow line, you get to know the bias. It gives you the power and understanding that, hey, you know, if I'm going to buy this and invest in it for 3, 4, 5 years, I want to make sure this yellow line is angled up. Because what a lot of you guys are doing is you're finding companies like this where the yellow line is down. A yellow line that's angled down is one of the worst. Guys, you're talking about 4 years where the average starts to go down. And you trying to buy something where the average price from 4 years ago is going down? You cannot ever get me to buy a company whose 200-week moving average is angled down. And y'all be in my inbox every other day talking about Pfizer. This bad boy got 2 broken legs and an ACL tear and a neck injury, and y'all still buying. Y'all still trying to put them in the game. Still trying to make it. Can be a coach, but its playing days is over with, at least for years. And y'all still trying to buy this ridiculous stock. Like, the stock been going down for 3 years. And I get it. The same thing is happening. Remember, let's look at Nike. Let's look at Nike, guys, because I am about to look. Nike got the same chart. Nike looks ugly. But I'm even buying Nike right now. You can take a shot. Look, what would I have done if I had tried to buy a double bottom? Just bought a double bottom, Joel. Well, I would be losing still. It broke through support and it just broke through. I'm thinking about buying it. I know this is the ugliest chart in history. Well, Pfizer is the ugliest chart. But this looks like an upside down head and shoulders. If we can get the 93 and just sit at 100 for a minute, I think Nike might be turning around. Guys, Nike's been going down since 2022. It hit its all-time high. But look, even before then, everybody was buying it just like clockwork. Look, every time it hit the yellow line, every time it hit the yellow line. And then it went through the yellow line. It came back up. And then once it got underneath it, it's just underwater. Disney's the other one. So I'm thinking about maybe sticking my toe in. Disney also, look at this ridiculousness. But look, it got above the yellow line finally. And it's been going sideways, guys, for about 3 years. So I'm actually thinking about buying Disney. Ugly chart. Wasn't buying it just because it hit a 52-week low. I'm buying it because it's been bottoming out for 3 years. I kind of like companies that have been bottoming out for 3, 4, 5 years and rounding out and looks like it's starting to maybe turn up. Because my risk, guys, is from 112 to 80. 112 to 80. If it drops 15 or 20%, I'm out. I already know what my risk is. Cool. All right. Sorry I wasn't able to get to anybody. I didn't get to nobody's stock. But we looked at the top 10 plus 2. We looked at the top 10 plus 2. And the S&P 500 if you want to add that one. So again, guys, what we're looking at is the 200-week moving average. Please don't get it mixed up with the 200-day moving average. The 200-week moving average is a lot stronger because it's the average price over a 4-year period. Okay? If you get underneath this bad boy and it starts to turn down, sell that stock. It might not turn around for 3 or 4 years. Okay? Think of this as the Titanic. When the Titanic starts turning down, it ain't no turning back for a minute. 200-day can turn down and you might be okay. When that 200-week starts to turn down, guys, that's trouble. Trouble in paradise. All right. So use these indicators. They really, 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 really do help. Now, tomorrow I'm going to do the Mission Impossible. That's going to be the last time we strictly use Yahoo Finance. After tomorrow, we're going to be using this chart a lot. I'm going to teach you guys what each of these little candles are. They're called candlesticks. We're going to learn. We're going to break down the 200-week moving average and the 200-day. Your job is to figure out what company broker you're going to go with. And if you go with that particular broker, you got to make sure that you know who you're going to use for charts. Every single solitary person here can go to Yahoo Finance. I get that. Yahoo Finance is the basis for everybody. Your traders, I get it. You're not going to want to use this to trade off of. I get that. But you're going to be able to break down the stock here. I usually will break down the stock here before I go to my main chart. So if I'm thinking about something I want to buy, I want to see the market cap, the beta. I want to see what its bias is on that 1 year and 5 year chart. Once I get that information, then I'll pull it up here with my main chart so that I can see it clearly like this. All right, this is the next step below. But if you're an investor, you don't necessarily need this down here. But anybody that wants to buy something and sell it within 12 months, in my opinion, you're going to have to learn how to chart read because you're competing with people like me. And we're not going to lose. All right, you're going to lose. All right, so you might as well learn how to do it. And I'm going to try to take you guys through the process of doing it. So thank you for the support today. Before we get out of here, did I meet my goal? I guess I met my goal today. Thank you guys for helping me meet my goal. I know I was gone for 4 days. I was out at a wedding in Mexico City, Mexico. I learned a lot when I was in Mexico. Everybody and their mama drives BYDs. So I don't care how you feel about electric cars in America. Everybody had a BYD electric vehicle in Mexico. And BYD became the largest electric car company on the planet, surpassing Tesla as far as I think sales. So, I learned a lot while I was over there. And again, I saw a Shake Shack over there. All right. I'm invested in Shake Shack. The minute I saw it in another country and I was like, oh, okay, this company is growing. And most of us don't even have them, in our cities yet. So I love to see stuff like that, especially in the investments that I'm in, because it gives some validity to, where my money is located. I see a question about how to join the fan club. So you can join my fan club by going up here where you grab the Heart Me. When you grab that Heart Me, when you grab that Heart Me before you claim all of your rewards, it's going to ask you, do you want to join the fan club? I'm going to do lives strictly. So listen, guys, the 1 day a week that I do for my super fans, it's really for my beginners and intermediates that may have missed a week and they need some tuning up for what we covered the week before. My intraday traders and traders that want to get into the market, some of you guys that are advanced, that are talking options, futures, maybe even a little bit of crypto, you guys can find me during the day at 1 o'clock. So at 1 o'clock, you guys can come in there, and you beginners, if you try to come in at 1 o'clock and you don't understand charts, you're going to get lost, because I'm going to be talking a different language at 1 o'clock. I'm strictly talking to my millionaire, the guys that are trying to make 1,000% and 100% returns a day, trading options, futures, and crypto. But we can all meet up here at 6 o'clock and rub elbows with each other. And that's why it's very important to me that when you guys are asking questions, that you ask questions that are specific, because I got day traders in here, intraday traders in here, investors in here. So we got to all be able to communicate, and we all got to get along. So we got to know what questions to ask. So I'm back. So I'll see you guys at 6 o'clock tomorrow, and I'm out of here. Now, the next Superfan Live is either going to be, I think I'm going to be out of town again this weekend. I got to check my schedule. If I'm away during the weekend, it's usually that Superfan meeting will be the following day, which will be that Monday. If I'm gone on that Monday, it's going to be that next Tuesday. I usually will tell you in advance. I'm going to try to go live at 1 o'clock for my day traders, Monday through Thursday. All right. And then I'm going to do the 6 o'clock every day for you guys, unless I'm on vacation. All right. So I'm out of here. I don't know what I'm going to play.